right, so welcome everyone to Vets to Industry's Financial Planning One-on-One webinar. My name is Carmen White, and I am the Chief Operating Officer for Vets to Industry. We're very excited to have you join us today for this important conversation, and we're very grateful for Kimberly for being one of our biggest supporters and suggesting that we bring this to our audience today. Before we get started, I do want to share some of our a little bit about Vets to Industry and then some of our upcoming events that you can take advantage of. So if you haven't heard about us, we are a national, worldwide veteran service organization. We are a nonprofit dedicated to supporting military veterans, service members, and spouses. And the way that we do that is connecting them with valuable resources so that they can transition effectively and easily. And also, as they're going through any career transitions or pursuing education or just need access to information to help them throughout their life. So we do all of those things. And we're going to put a few links in the chat so you can utilize those if you need help in any way. So if you need help with your resume or a job search, if you're an entrepreneur and you want to promote your business, you can list your business with us for free. We also provide opportunities for you to donate if you want to see more services like this, or partner with us if you would like to join in on the impact that we have in our community. And we have a few upcoming events. On the 20th, we have our Workplace Empowerment Series that's going to focus on helping those who have lost their job or transitioning from their job to another job. We also have our virtual networking circuit event on March 29th. That's a Saturday from 3 to 7. You don't have to stay the whole time, but drop in and hear our keynote speaker, who is Anthony Niles from Jobs with DoD this time. And also we're going to be highlighting one of our partners, Rapid Ascent, and they have a skill bridge focused in cybersecurity. So that might interest some of you. Also, we have an upcoming in-person event on April 26th. So if you're in the San Antonio area, join us at the tournament for some gaming and also to learn about resources available in your area. And again, I'll post all this information in the chat so you can register and check it out a little more and see if it's something that is going to be beneficial to you. But now I want to get to the good part and introduce our speaker today. Her name is Kimberly Schultz, and she is a highly experienced financial services associate with a deep understanding of the unique financial challenges that veterans and military families face. And today she will be sharing valuable insights to help you manage your finances effectively and plan for a secure future. So please join me in welcoming Kimberly.
Thank you, guys. Hopefully everybody can hear me. I appreciate the opportunity. I have been volunteering with Vets to Industry for, I want to say, closer to 2 years now. I started coming to the networking events, and then when they launched the networking cruise, I helped with planning that last year. So if you're thinking about that, definitely join that. I went on the cruise myself. I also helped plan. We talked about financial literacy on the cruise too. It was an awesome experience. But more importantly, I'm a supporter for you guys. So as I'm going through this, my goal is to provide value for you guys. I come from a military background, not me personally, but my family is military. So as far as, I had grandfathers are World War II vets. My uncle was a Vietnam vet. I grew up around West Point, and then more importantly, I volunteered before at the VA hospital. So I know how underserved the community is, and that's why it's so important for me to give back to the community. So my goal today is really to teach you guys something new as far as what I'm going over, and you guys should be able to see my presentation shortly. Can you guys see? Everybody can see everything so far? So as far as experience goes, I have been in our industry for almost 5 years now. So I've learned not just veterans, but yeah, I would like to say that's my passion, is to help veterans. So I do a lot of work with military and that community, but more importantly, it's to provide value. I used to come from corporate America. I used to book and plan events for Hyatt back in the day, But I knew for me, I wanted to have a bigger purpose of giving back. And this was a way to do that. So I actually stumbled upon this opportunity through a counterpart of mine. And when I saw just how much they were doing for people, that's why I started in this company. So the name of the firm is Revolution Financial Management. And then when I'm going over these things too, I want you to think of a few perspectives. Is there questions you have for yourself? Because there's things I want to you to learn, and if there's anything that you need help with, I'm here to help you. And the other thing is who do you know that could benefit from it? From a better financial education. There's lots of people that are not in the military community. I do service all 50 states and I do help all families. So if there's someone that comes to mind, please share my info with them. I really am happy to help as many families as possible. We are in a huge expansion mode with our company, but today we're not going to talk about that. I'm more focused on the education. So if you have questions on that, we can still connect. But as we're going through, these are the main things when you're talking about financial literacy and education. We're talking about short-term savings, we're talking about long-term wealth, preserving wealth, debt management, and insurance protection. So keep that in mind. Okay, so the biggest thing you're going to see here is personal responsibility. So when you're looking at overall stability for financial freedom and independence, it's really three legs or three pillars that you focus on. Social security, we all know, I don't know, depending upon what your age bracket is, if you're close to retirement or you're in the process of doing that, we don't know how long it's going to be here. I would like to say forever, but we realistically we don't know that. So we can't fully just rely on that. Then you have pensions. I am very familiar with military retirement and pensions and how those work and how pensions work in general, but not every pension is guaranteed depending upon what company, especially if you're transitioning out. That's definitely something to pay attention to. And then you have the personal savings side. So the personal savings, that's the one you have the most control over that you can actually, monitor and get better at. So anytime we're sitting with somebody and they're learning about the saving side of it, we're sitting with them and we're seeing, okay, what's coming in, what's going out as far as budgeting. Half of their income is going to living expenses, 25 is going to taxes so they never see it, and 25 is going to debt. So keep that in mind. So why our firm is different and how we're helping families is we are focused on the education based. We're not here, to provide, just a product or a strategy. We're really focused on the education. And our mission is actually no family left behind, which is something that I can totally resonate with. But you'll see here too, for just to give you an example of real life statistics, middle American families are the most underserved portion in America right now. This is giving an example of just average salaries that you would need in the US to be middle class, and that does fluctuate quite a bit, as you can see. So the dramatic need for financial literacy, and this is why it's so important, is if you look at some of the numbers and when you're really learning financial literacy and how to create generational wealth and teach your kids if you have children so they're on track to be financially free and independent. These are some of the statistics that are out there. So more than 60% of Americans are living paycheck to paycheck right now. With more than half of Americans are earning more than six figures and they're still living paycheck to paycheck. More than a third of Americans have more credit card debt than they do an emergency fund. And only 44% of US adults would be able to cover a $1,000 emergency, which is insane if you think about it. If you had people that were to lose their primary source of income, 66% of US adults are worried that they wouldn't have enough to cover an emergency fund or their living expenses. On the insurance side, the life insurance side, there's about 62% of Americans who have life insurance and they feel secure with the insurance that they have. But 46% of Americans don't have life insurance at all. That's why you're seeing if they don't have insurance in place, you'll see GoFundMe's, or if they need help with a medical emergency and they don't have the proper protection or being prepared, you see families struggle in that nature. 46% of Americans buy life insurance to provide inheritance to their beneficiaries or to protect their assets, or even continue as a savings vehicle. Many people that don't have life insurance, they either they do, but it's not the right amount of coverage, or they don't get life insurance because they assume it's more expensive than it actually is. So this is just an example of what the difference between middle America, what people are doing, we're seeing on a regular basis versus what, if you want to know the secrets of the wealthy, what they're doing. So middle America, they are making about six figures or less. They do have a job. Maybe they have a retirement through their employer or a private one. They do have term life insurance. Maybe they're renting a home or they're looking to buy a home. They're putting money into the bank. Maybe they have credit card debt. They're not really taking advantage of tax breaks. They don't have a plan in place, and that's really a majority of the population. On the flip side to that, there are people that are doing these things. They are making over 250 a year. A lot of them have businesses. They have permanent protection in place. They do own homes. Maybe they own real estate as rental properties. They have a diversified portfolio, and they are, if they're not debt free, they're working to become debt free. They do maximize the tax advantages, but more importantly, they have a professional to help them. So most people don't plan to fail. They're just, they don't know who to turn to or who to trust, or they don't have a plan in place. So that is something to keep in mind. What we're doing as a company and why we're so different from everybody is we have the backing and support by Transamerica and Aegon. I don't just work with them, and I'll go over that. But we're really focusing on the education, and it's customized. So if somebody needs help with something, it's not a one size fits all for everybody. This is a huge one. We're going to start to break down some of the concepts in financial education and what's important. The first thing is a financial independence number. This is also known as a FIN number. If you've never heard of this, this is what your target number should be. When you're going to prepare to retirement, you should have that number in place so that way you can create a strategy to help get you there. How you can calculate that, if you guys have never thought about it, it's how much do you want to live off of in retirement a month? Then you take it a step further, also factor in your expenses. And then you would say, okay, if there's 12 months in a year, you take that monthly amount, you multiply that by 12 for 12 months in a year, and you divide it by 0.06. The reason why we divide by 0.06 is to combat inflation. We know inflation is higher than 6% right now, but the historic average is closer to 6%. You can also take it a step further. When I sit with some families, there's a financial calculator you can use. And if you already have investments or you've got, retirement plans in place, you can calculate based on what you currently have. And if you're getting a certain rate of return, how much you would need monthly in order to hit that financial independence number. So that's a big one. These are crucial. The 6 steps to financial independence. It all starts with a budget, right? You have to have a guideline of what's coming in, what's going out. I recommend there's lots of ways to do it. There's a lot of free documents that you could just get a financial needs analysis. I can post one in the chat too, if you're ever looking to how to do a budget. You can do Excel. A lot of people do Excel spreadsheets, whatever works for you and your family. You just have to make sure you're getting the right info. The first thing we're looking at is cash flow. The problem that we're seeing is that most people don't have a spending problem. They have an income problem. So you're seeing more and more people have multiple businesses or multiple jobs, or, they're looking for ways to really increase their cash flow. The other thing is too is managing expenses. If there's ways to cut out expenses, look at that. There's things that you could easily take control over, right? Some things we don't have control over. We don't have control over the price of food or gas or whatever that may be. But when you're looking at things you can control, think of auto insurance. When was the last time you ran a quote for that? If you look at your utilities, maybe you're paying too much for your electric company, or if you even have solar, that's a different avenue. But same thing with eating out, dining out versus groceries. That's an easy one. A lot of people don't even realize, for example, say you're a Starbucks drinker or you're a coffee drinker. If you're getting coffee or at least 3 or 4 times a week, do the math on that, because then that could be an extra $50 a week that you could be saving. Now, I'm not saying cut it out completely, you have to really factor in what's important, but it could be temporary. If you're focusing on paying down debt, then maybe managing, okay, we're just for right now, we're going to limit how much we're eating out. The other thing to talk about is emergency fund. Usually a family should be saving 3 to 6 months of their monthly income. When you're looking at a budget, the thing you want to pay attention is your discretionary. What do you have left over after your expenses and after your income for the month? Out of that, you should be putting at least 10% of your monthly income into your emergency fund. Now, that's not always doable for some people, so we are aware of that. But at least if you build the habits of paying yourself, I would say this is the biggest advice I could give. It takes discipline, but here's the thing: if you can learn how to pay yourself every time you're getting paid, then by the end at the end of the month, you now know you've put money towards savings. And what happens is a lot of people, if you think you have a lot of your bills on auto pay, they don't realize, okay, everything's coming out, you're spending on the day to day. By the end of the month, they feel like they don't have money to save. So if you're paying yourself, even if you break it up, if you get paid biweekly, you can do some from each paycheck, or maybe you take it all out of one paycheck and have that habit of paying yourself. That's a big one. Debt management, this is huge. I mean, reality is, how many people do you know that have some sort of debt? I would imagine most of you would say at least two or three that you know, right? It's inevitable these days. So the best thing you can do is consolidate debt, and you want to strive to eliminate debt completely. Tips for credit cards and personal loans or student loans, whatever that may be. A strategy we teach is debt stacking. So when you're looking at how much debt you have, you want to pay attention to the interest rate. So what you can do is organize from the highest interest rate to the lowest, and then you look at your minimum payment and then the balance. So what you want to be doing is you want to pay over on the highest interest, and then minimums on the rest. Once you're done paying that debt off, you take all of that money that you were paying on that debt and now apply it to the next highest interest. It's also, if some of you are familiar with the snowball effect, that's a way to do it as well. But that's a way to consolidate your debt a lot quicker. The other thing is, if you have credit cards and say you are overpaying on the credit cards, if you make multiple payments in a month, that's also going to help boost your credit. So, meaning, say you're going to pay over $50 a month on your one card, you have the minimum, okay, fine, pay that, always pay before the due date. You don't want to accrue any late fees or whatnot. But it's, if you're going to make an extra payment, do it in a second, like later in the month. So that way it's showing you're applying multiple payments. That's going to help boost your credit. The other thing is, if you have negative credit, there, a lot of people don't realize you can negotiate, as far as if you need to, if they're coming after you saying, hey, it's going to go to collections, you need to figure this out, you can negotiate with them. They sometimes will put you on a payment plan, or sometimes they will even cut down the debt just for you to get that some money out of you, which is, I know is crazy, but that's the truth. So that's something on the debt management side. The proper protection, this is going to be the life insurance side. This is protecting against loss of income, but also protecting families' assets. Life insurance has changed a lot over the years. A lot of people don't realize there's a lot of living benefits to it. There's long-term care now, critical and terminal illness riders, that if something happens to you, you can actually access part of that death benefit up front, which is huge. And then life insurance now has, depending upon the type, you can actually use as a savings vehicle, and that is tax-free. Fun fact, depending upon what it is, tax code 7702 allows you to build tax-free growth within a life insurance policy. As far as building wealth, this is huge. You want to strive to outpace inflation and reduce your taxes, and then preserving wealth. You want to reduce taxes when you're in retirement or preparing, and then build a family legacy. So hopefully some of those tips, I have lots more. I have another good one too, that if you guys are impulse buyers, or if you have any family members, maybe they're Amazon shoppers, I like to tell my families, do the 24-hour rule. If you have it in the cart, let it sit over 24 hours, and see if you still really need it. Even myself, I've done that. And then it could goes for online shopping and so on. It prevents you from making that impulse buy. So that is another key thing to talk about. As far as when people do budgeting, if anybody needs help in any of those areas, you can sit with me directly. It is customized. It is geared for you. If you just have questions, I'm here to help. I'm here to provide value. It is it's low key, no pressure approach. I don't have to sell you guys anything. I don't have to provide a certain strategy. Yes, I'm licensed to do the life insurance and the retirement planning, but the goal is really for you to get value in education. So anybody that sits with us, we don't charge an hourly fee. We get paid by the companies on our platform, and I will explain how we do that. But more importantly, we start and do a budget. We go over what's important to you. You want to look at your short-term, mid-term, and long-term goals. And then we come up with a game plan. If there's areas we need to improve, great. I love telling people we're doing things great and we only need to tweak a few things. That is a thing too. And then once we do the budget, I go and come up with a game plan. If we need to look up illustrations, I will do that. And then I sit back down with you and get everything in place. The best part about it is you never have to pay me throughout the whole process because we do work with a bunch of companies and they pay us directly. So just so you guys can see like how big of a company and what we're doing, we have over 220 companies and carriers on our platform. You probably recognize some of these on there. These are just some of them. They're obviously not all of them, but we are giving families the power to choose. We're teaching them about, okay, different strategies, even going over a retirement plan. If you don't know how that works, I've sat with people even with their current job and just explained to them, okay, here's what's going on. Here's your expense fees. What do we need to do to help optimize that? We also do that as well. So we are representing a huge industry. That is why we are growing and people need the help because there's millions of families that need help in these areas. Another few concepts to go over that can help you. Time is a huge thing as far as saving and assets. It can be either your greatest ally or it could be your enemy. I will tell you, the sooner you start to plan, the better. The more you're getting your ducks in a row now, it is going to help you long term. This is just an example of someone saving an average of $5,000 a year in a tax deferred account, and then they have a 10% rate of return. So you can see if person A, maybe they've invested, 40 years and they've put 200K of their own money over time. At 10% rate of return, they're up to 2.2 million. Then if you have somebody, maybe they're a little bit later, they're 2 years behind. They put in 190K, they're saving about 1.8 million. The difference of 2 years and $10,000, look at the difference. It's a $400,000 difference. And if you break that down, 8 hours a day, 5 days a week, that's about $96 an hour. So keep that in mind too. When you're looking at the rules of money, the biggest thing is the compounding effect, and I'm going to teach you that next. Then you have the tax effect, and then you have the risk effect. When you have the proper income protection, you replace your income and generational wealth. That's where you get that financial freedom and independence. And like I mentioned too, our mission is no family left behind. So we are focused on that. Here's a big one. This can be applied for anybody at this point. If the compounding interest is teaching you how to make your money double and work for you. On the flip side to that, if you have debt, you can also use that, how long it's going to take for you to pay off your debt. So when you divide 72 by your rate of return, that's how long it's going to take for your money to double. That's the rule of 72. So most people are saving their income for liquid assets in a savings account. Have you ever noticed it's like a 1% rate of return? So not a lot, right? If you have a financial independence number of over 1 million, it's going to take a really long time to get there. Then you have some high yield savings accounts, some CD accounts. Those are usually between the 4 and 6% range. We do appreciate the high yield savings. So if you've ever heard of that, it is good for your emergency fund, or if you're saving for a down payment on a house. We like that a lot. And there's many out there. The big thing when you're looking at a high yield savings, just a fun fact, look if it's FDIC insured, no monthly minimums, and no transaction fees. That's a big key thing to look at. If you have something that has 10% rate of return, that's where you want your long-term savings or retirement. You want to at least be getting double-digit rate of returns. You can see after with utilizing your money will double every 7.2 years versus 72 years. So keep that in mind. Risk effect, this is different strategies. I'm not going to go too far into the weeds about different investing strategies and what you can do, but these are going to be the basics. So if you have a fixed strategy, that's like your bank account, that's good for, some liquid savings. What you see on the chart is you have safety because they give you that guaranteed amount, whatever the bank dictates. And then the problem is it's going to take a long time to grow. It's slow and steady. Then you have variable, which is more like the stock market. When the market goes up, you're going to get gains, but when the market goes down, you can lose money. So you don't have as much safety, but you have unlimited growth opportunities. Then this is the one that people don't really know about. This is index strategy. So this gives you both safety and growth. So when the market goes up, they're going to get gains. But here, some companies will cap the gains, some don't. And then when the market goes down, you have downside protection. That's what they call a floor or a buffer. They'll credit you interest based on that. Depending upon what the strategy is with that index strategy, you don't lose in this situation because of the downside protection. And the money's not actually invested into stocks and bonds and mutual funds in the stock market. It actually follows the overall performance of the stock market, the S&P 500, the global index. And based on how the market does, it's going to credit you interest. So especially if you're getting close to retirement and maybe you're not comfortable with market risk, this is another opportunity where you're still going to get gains, but now you have downside protection. Because if you think about it, all the baby boomers that are getting ready to retire, they don't have as much time as someone in their 30s. If the market tanks, we know it goes up and down. It's going to bounce back, but it takes time to bounce back. So if somebody lose like 30 grand and they're getting like 5 years out from retirement, they don't have enough time to make that money back. So that is another great thing to pay attention to. Just to give you an idea of the risk effect and the impact of losses, it does hurt more than you think. So if you're losing 50% of $100, what does that return look like to get it back to 100? If you only get a 50% gain, you're really only getting $75 back. So you would need 100% gain to fully recover for the $100 or the 50%. The last thing I'm going to talk about is tax effect. This is a big one, other hot button between debt management and this. People want to know about this. This is how taxes work during retirement. You have your taxable income. That's what you're from your job, your checking, your savings, CD accounts, stocks. So you get capital gains tax and then mutual funds. That's taxed annually, usually before you hit your bank account, or if it's capital gains at the end of the year. Then you have tax deferred. So taxes come at the end when you go to cash in. That's like your 401ks, your 403bs, your IRAs, TSP accounts, pensions, annuities, and so on. The problem with that is, where do you think taxes are going to be in the near future? Up or down? Most people would say up, and we truly believe that. If that's the case, you're making your highest income usually right before you retire. So that means you're going to be at a higher tax bracket, and then you're going to owe more money back to the IRS. It's okay to balance out your portfolio and have some tax deferred in there. We always encourage to have a balanced portfolio, but you want to have some tax advantage or tax free. That way you're not going to get killed with taxes. So the other thing is too, is with tax advantage, they tax it now at your current tax bracket. That's like your Roth IRAs, your 529 plans, your executive bonus plans if you're a small business owner, long-term care benefits, investment grade insurance, all of that money is tax-free. So that you want to have some of your assets on there. Secrets of the wealthy, they have more of their assets on the tax advantage, less on the taxable. Reality is most Americans don't know about the tax advantage side, and less of their assets are going to be on that side and more in the tax deferred. So that's a little bit on how taxes work. Outside of that, that's the main things I wanted to go over. I am going to open it up for Q&A. If anybody is interested in learning about how money works as far as books, if you like books, a good one that I could recommend is How Money Works. It's a simple read. Even your kids would probably get it. It's about 60 pages. It's on Amazon. And they also have, if you're looking to teach your kids, they have their website will give, little, not games, but I would say things that you can show your kids that they can implement. And they also, Tax-Free Retirement by Patrick Kelly is a good one. If you're learning about, the Money, Wealth, and Life Insurance by Jake Thompson is a good one. The Financial Pocket Knife, if you want to learn about investment grade insurance, that's a good one too. So those are just the basics, but I will remind people it's never too soon to start. If you need help with these areas, even like planning, if you're about to leave the military and start going into the civilian sector, this is stuff you do want to pay attention to. The other thing I will stress the importance is when you're looking at life insurance, because I am familiar with SGLI and VGLI, the things you want to make note of is that if you're going to do a disability claim, you want to look at your life insurance before you submit the claim. If you've already done it, it's okay. It's not like you wouldn't get approved, but it is something to make note of that you could get approved at a lower rating or it could cost more. The other thing you want to look at too is when you're looking at how much life insurance you have, how much debt do you have, what your replacing your income would look like if you have a mortgage to offset the mortgage, and then also education. If you're paying for kids, you're going back to school, that's how you factor in how much life insurance. Reality is with SGLI, sometimes it's not enough, especially if you do have kids. The other thing to look at too is when you're talking about life insurance and doing the disability claim, the younger you are and the healthier you are, the better the rating, the cheaper it will be for you. So that's something. Same thing with TSP accounts. If unless you're going to do a DoD or a government contract job or work for the government after you retire out from the military, you want to look at what your options are, because you can move your TSP money into something else. Even if you want to contribute to it or you don't want to contribute to it anymore, there are ways to do that. So that's something to make note of. But outside of that, I hope you guys got value. If you have questions, I am here to help you. You know, I've been volunteering with Vets Industry for a long time. So I will open it up to Q&A, but I hope everyone got value out of it. I'm going to have Carmen put my LinkedIn in the chat. And then I also am going to put my email in the chat. If you do want to sit with me or talk more about any of this, or maybe you just want resources for veterans, I am very pay it forward. You know, anything, even if you need career help, I am a mentor for American Corporate Partners. So I'm happy to share any resources. And if you do want to book a time, then just let me know and I will sit with you and answer any questions. The last thing I will say too is I didn't talk more about the business side of what we're doing today. That wasn't the purpose of the conversation. But if you are keeping your career options open, or if you know somebody that's looking for an opportunity, our company is looking for good people, and you don't have to have a finance background to do it. And we teach you the ins and outs of finance. So if that makes sense to you too, reach out and then I'm happy to help. All right, Carmen, I will turn it over to you and then we can do any questions that people have.
All right. Thank you so much, Kimberly, for sharing all of that knowledge. I tell you, every time you talk finances, I feel smarter because you do it in such a way that we can understand, and it really helps us. So we're opening it up for questions. Don't be shy. Kimberly is here to help in any way she can. And you had a question earlier, Kimberly. I'll go ahead and read that one for you, but it said,
Yep.
I do not have a credit card, never had one. Is that good?
So it depends on, you will need credit, like your credit score to do different things. So if you want to buy house in the future, I would say you can get a credit card, but here's the thing, right? You're going to need to show that you can, same thing with making payments on time. If you have a car payment, that's good. They're going to look at that. Because when you look, if you're buying a house, they pay attention to your debt to income ratio. So as far as having a credit card, it's not bad. You just, what we don't want to happen is we just spend on the credit card, it gets out of control, then you're paying like a ton of interest on it. I always tell people, if you're the type of person that has a credit card and you're tracking what you're spending and you're paying it in full every month, that's okay, because it's actually going to boost your credit. So even for someone who's not used to a credit card, I would say if you're into traveling or you like cash back, there's a lot of different cards that have those features. So if traveling is important to you, make sure you get one with points. And then the thing you want to pay attention to is interest rate. And there's some credit cards that will do annual fees, so be mindful of that too. But anytime you have a credit card, it is going to help with, like, even if you want to rent an apartment, they look at your credit history. If you want to go buy a car, they have credit, they run your credit for that. So yes, I would say if you're needing to build your credit, having a credit card will help you. It's just be mindful of how you're spending it, and make sure, if we all know, if people have credit card debt, sometimes it's not easy to just wipe it out overnight. You have to be like, that's why we teach the debt stacking and the snowball effect, so that way they have a strategic way. I don't do any credit repair, but I do teach people how to build the credit the organic way and pay down the debt. So great question though, because yes, I don't think it's bad if you're going to do things in the future. I would recommend do your research as far as a good company. make sure it's doing what you want it for it. And then like, if you want to even charge gas every month on it and then pay it off in full, that's not going to hurt you. Same thing with like, maybe you want to put your electric bill on there and then pay it in full. That's like a safer way to do it, but while still building your credit. So that's a good question. Any other questions we have?
Feel free to come
So
off mute if you want to ask to.
I think someone asked too, if somebody, how do I know if 25% is going in debt? So not everyone's going to have debt, right? What we find, because I've sit with hundreds of families every single time, somebody's got some sort of debt, whether it's 25 that will fluctuate, but at least 50% of their income is going to living expenses. If they're debt free, I love saying, hey, you're doing well. How else can we help optimize it? But reality is right now, Americans have a ton of debt. That was a good question too. Anybody else have any questions? Oh, someone made a comment too, the insurance, those premiums after 60, that is correct. It is very hard, really, honestly, after the age of 50 or 55 to get cost-effective insurance. It's not impossible, but you're more limited. So that is very correct. I think, Eric, you have your hand up. Do you want to come off mute?
Yeah. Do you have a program like with school bills, which you got to keep constantly paying, and they have a high interest, and credit cards?
Yep.
But I tried to do the credit card consolidation one time, and they
Mm-hmm.
wanted me to like you go where you don't make a payment, you get bad credit, and then they take it over. I'm like, well, what the hell? I don't want to do that. Is there another option?
Yes. So this is why I'll be honest, I'm not a huge fan of consolidation and credit, because what happens is, for anybody that's not familiar with that, they negotiate with those creditors that you're in negative standing with, and then you are supposed to pay a monthly payment. Now the problem with that is it's going to wreck your credit. You're going to have to build it up. So if you utilize the debt stacking way, with like when I sit with people, and it takes time. And if there's some that you have to negotiate directly with the creditor, like if anybody's on the verge of collections or like they're getting threatening emails about the court situation, then you want to call not the collections company. You want to go back to the creditor and negotiate. That's a huge one that people do make that mistake. Like I said, some people I've seen do the consolidation loans, it works, but then the interest is super high. So it's like it's like a
Yes.
double-edged sword. So basically you want to attack it on your own. But if you need help with that, that's what I do. That's something I sit with people and put together a strategy to help them do that.
Thank you.
Anybody else have any other questions on that? Because I know debt's a hot topic for people. The other thing I will say too is if you just want to connect with me on LinkedIn, by all means, I have a lot of veteran resources on there. That's huge. And hopefully we'll get to do an event in person in Houston. I know Han and Carmen and I are going to talk about that. So if you're ever in the Houston area, let me know. I'm happy to get to know you guys or help you in any way I can.
Kimberly, I have a question for you that came
Yes.
through our email.
Yep.
What do you do if you're starting late in the game, age-wise, and you don't have
Mhm.
any savings or a solid credit history built? Where do you recommend that person start in this?
It all starts with a budget. Oh, I think somebody was trying to get in the waiting room too, by the way. It all starts with a budget. If you're late in the game, I will tell you it is a little bit of an uphill battle. It's not going to be easy. It's like that for everybody. But the thing you got to be diligent about is what's coming in, what's going out. If they're not familiar with how to save, it starts with a budget. When you're doing that, if they are later to the game, depending upon what their income is versus expenses, you may have to get another stream of income to help offset those goals. It's not ideal. A lot of people don't want to do that. But I always tell people it's a season of temporary. If you're doing it now, so that way when you do want to retire, you don't have to retire later on. Unfortunately, if it is very, very late, I've seen it sometimes. People have to work a lot longer because of the lack of planning, but they need to start with a budget. If they're not familiar with establishing credit, then that was something about talking about a credit card. I don't always encourage people to get that, but at the same time, depending upon the situation, if they're looking to rent something or buy something that it requires them to have credit, then we start building that, because that's huge. But I would say it's never too soon to start, though. If you guys are about to retire from the military or you already have, 2 years even is not, it's not like too soon. Like even getting your ducks in a row is never too soon for that.
Thank you, Kimberly. And Adam asked, are there any other tools besides Snowball Avalanche for paying down debt you could recommend?
So there's a lot out there. I do, you know, some people in theory, here's the thing, when you're talking about paying down debt and you look at the minimums are only going to hurt you if you're only paying minimums on all of them. If you're not working on paying off one, then that's a different story. But if you're only paying minimums, you're really paying towards the interest and not towards the principal. So the things you would want to pay attention to, you know, besides that, that's the best way I can recommend. But I've seen people have a strategy too, where, and I'm okay with it as long as it works within the rest of their budget, is if there's, you know, ones that they can easily pay off quickly, even if that's not the highest interest, I'm okay with that as long as your budget allows it. I don't want to put somebody in a negative standing for that. The other thing is maybe if they want to work at 2 at one time, that's okay too. Like if you have the extra discretionary and you want to pay over on multiple, even, and some people like to think too, it's like, okay, what about this one? It has the bigger balance, but maybe it doesn't have the higher interest rate. I'm okay with that as long as you're paying over on some of them to get the debt paid down. I'm aside from that, like I said, I'm not a huge fan of consolidation loans. Have I seen good outcomes of it? Sure. I just think too, because here's the thing, right? I like to think of it as like a Band-Aid fixed. So if you fix a Band-Aid and you temporarily fix it, it's still not building the habits of learning how to manage the debt and build. Same thing with credit repair, because a lot of times when people see their credit, and if there's something negative on there and you go to buy a house, it's going to show up. Same thing on a car. It's going to have that negative standing. So taking the hit on your credit, we don't love that. But like I mentioned, if you're looking to build your credit, you know, paying extra payments or paying before the due date. Not the other thing is credit card usage. So if you're under 30% usage on the card, that will also boost your credit. That's something else to talk about too. But I would say that the Snowball Avalanche is my top recommendation. But there are other ways, it's just customized. Like I've had people come up and tell me different ways. And sometimes I say, yeah, that's okay to do that. And other times I'm like, I wouldn't advise it, but here's what I'm giving as a recommendation. You are in control of what you do. I'm just giving you what I recommend. Hopefully that helps.
Thank you, Kimberly. We have another email question. What
Yep.
insurance do you recommend for a newly separated military member with no family?
That's a loaded question. So I would say, here's the thing, right? It goes a lot into it for the loaded. Like if you don't have if you're newly separated, you don't have family, right? You got to look at what do you want the insurance to do for you? What assets do you want to protect? So all of that is when you're factoring in how much insurance, that plays a factor into the cost of insurance. As far as companies go, I would say there's a lot out there, but you have to do your research, right? So when you're looking at, you want to make sure you have enough to fund the insurance. You have to look at both what's good for you. Is term good for you or permanent? Because remember, term is temporary. So it's a set time period. Once that is up, then you would have to either continue it and it would be more money because you're older at that point, or it's good for like if you need that extra insurance, maybe you have a house mortgage right now, or you've got kids that are still dependent on you. Term's not bad as a supplement. Some people here's the other thing, most people can outlive their term policy. That's why they get a permanent policy. So as far as when you're looking at it, what do you want it to do for you? Do you want to build cash value in it? What kind of benefits do you want as far as living benefits? So all of that is going to vary in cost, but it also factors on your age. So when you're looking at good companies, there's a lot of questions that go into it. I wouldn't say one over the other because without seeing a budget, that would be not ethical for me to do that. But there's a lot of good companies out there. Transamerica is a great one. I can personally tell you I have their insurance. Nationwide's another great one. Prudential. I've seen some of the Navy Fed ones, and those ones I've researched a little bit. It just depends on what's important to them, the goals of it. And then what do they want the money to do for them too? Because for it sounds like in that situation, if he doesn't have it, or he or she does not have as many beneficiaries, there's other things for him that he can utilize, or she can utilize that money that is growing in there for when he's living. So that's something to keep in mind too. It just depends on situation though. Great question though. That's a good one.
Thank you, Kimberly. Any other questions? We have time for a few more before we close out today.
I would say for anybody that's on the call, what are some of the challenges you're seeing or things specifically you want help with? Because if there's here's the thing, there's no like question that's too silly or crazy. I probably have seen it all. But at the same time, if there's any areas specifically that you feel like you're struggling or you want more help on, what are some of those areas? Because it could be something we didn't talk about that I still can provide insight for. Yep, Adam just put do the insurance before the VA. Yes. So Adam, I don't know what is on your medical background, but if you have questions and you got denied on that, we should maybe talk because there might be other scenarios. Even if, so just an example, I have people that have 100% disability rating that I have gotten approved. It just depends on what is on the medical records. So that's, yes, I always tell people before your medical records hit the disability rating or claim, send that to me. But for example, I just helped a lady this week. She has a medical history and has the PTSD, mental health, and they haven't denied her. We are going through the underwriting process. So there's ways and questionnaires you can fill out before that. So Adam, if you need help with that, let me know. And then I can also see what's going on for you with that.
And Kimberly, you mentioned earlier about your starting point is always a budget. Are you able to help anyone start that process of their budget?
Oh yeah, that's what we do. So if people want help, if say you just need help doing a budget, that's exactly what I do. Usually when someone sits with me in the first appointment, it's really to get to know you and go over what your goals are, your short-term, midterm, long-term goals are. If they need help doing a budget, that's usually the follow-up call. So if they just want help doing that, you can do that. We have a form that I walk you through and I get on Zoom with you together. And then I would go through those guidelines with you of what's doing well, where do we want to improve, what are some of your short-term, long-term goals. And then I think somebody asked about disability claims. Yep, by the way, full disclosure, I'm not a disability claim guru, but if they need help and really, if you have questions on it, we do have resources for that. So that would be my email, send me a message, or if you add me on LinkedIn, I'm very active on there. So if you want to see or sit down or, have specific questions, I'm happy to do that too. But yes, disability claims, even if you're 100%, here's the thing, you have to know, because there could be some things that are on your disability claim in regards to the life insurance that are not as big of a deal to the insurance company. It just depends on how it's positioned also. And then the follow-up questions that go with it. Any other questions? I like to have an interactive crowd. So did anyone gain value out of it at least? I hope you learned something. You can come off mute if you did or put it in the chat.
Yes.
Awesome. And please feel free to share any of this information I just went over with, anybody you know, and they don't have to be veterans, right? Because I do work with all families, but the little tips, like the budgeting tips, I hope that, you can share it with loved ones or family or friends. If it can help anybody, then I know that I've done my job for today. I've given people some value. But outside of that, I'm a big supporter of VETS2INDUSTRY. I can't thank them enough for the opportunity, but if you go to the networking events, you probably will see me. I do try to go as much as I can. And I am a big support of the cruise as well. So outside of that, though, anybody else have anything else before we have like a few more minutes left? And here's the other thing too, I will tell you this, if you forgot anybody or say you know somebody that could have benefited from this conversation, I know this is recorded, right, Carmen? You can always send it to them or just relay what you learned and say, hey, listen, you can talk to Kim. She might be able to help you. I can recap them of what we went over.
Absolutely. So before we close, we're going to post Kimberly's contact information again so you can reach out. And like she said, we'll have more events together and also an in-person event that you can come and check out if you're in the Houston area. We would like to invite you to our next events, which one is March 20th, which is our workplace empowerment event to help those who are transitioning or just recently lost a job. And then our next virtual networking event, which is going to be on March 29th from 3 to 7 on a Saturday. And also, like Kimberly said, if you can join us in August for our annual conference on board the Carnival Horizon cruise ship, that is going to be an exciting time to learn more and network with fellow veterans and other veteran service organizations. So we'll post that in the chat so you can register. But thank you for joining us today. Thank you, Kimberly. You always share such a wealth of information. I do want to share something about Kimberly. I met her on the cruise and she gave such a great presentation. And one of the things that stood out about her presentation was that she stressed that you should always plan financially. So whether you're in a job or you're changing a job, you need to have periods where you readjust, where you do your budget again, where you see if your expenses are lining up to what you're making. And Kimberly talks the talk and she walks the walk. Like, she helped me. I was just scared of the whole process, but she made it so easy. She changed my whole mindset about financial planning, even at this stage in my life. And I know that she can do the same for you. So don't be afraid of finances. Kimberly will make it easy. And she is a supporter of our community. So we highly
Thank you, Carmen. And she's right. I don't, just because I have a blazer on doesn't mean like I'm very laid back. I'm not like a traditional financial services person. You know, I do really help people and want to give back. So anything I can do for you guys, I'm really happy to do it.
All right. Well, we'll go ahead and close out. Don't forget to connect with VETS2INDUSTRY on LinkedIn. And again, connect with Kimberly. We posted her information, but we'll see you at the next event. Thank you so much, Kimberly, and have a great Friday and weekend, everyone.
Carmen, do you want me to say about the Houston event in here? Yeah, I can chat with you. I have a few more minutes.
All right. Bye.
Thank you guys for attending. We appreciate